Okay, and welcome back, students who are taking financial accounting. We're working on the Chapter 2 exercises, Group B. And in the last video, we stopped on problem 28. So let's pick up with problem 29. And remember, if you don't understand something, feel free to watch the video, again. And if you still don't get it, telephone and speak with an instructor. Okay. Now, as we progress through these problems, these exercises, I'm noticing that, like, I said, oh, well, problem 28, was like 2/3 of doing the graded project that comes after chapter 3, after that lesson. As I'm looking at the instructions for 29 here, this is fleshing it out. So in doing these problems, you're basically learning how to do that graded project, okay? Now, granted, it's not going to mimic it. I mean, the process is going to be the same, okay? And what you do as you work through these exercises, that's what you're going to be doing for the graded project. I mean, obviously, the information is going to be slightly different. You'll have to adapt to that, okay, to that particular situation. But when I'm looking at this, requirement 4 says prepare a trial balance down here. And then it says prepare the income statement of retained earnings and the balance sheet. Okay, the only thing that is different from this problem versus the graded project is that you're going to have adjusting entries and you'll make closing entries, which you're going to learn about in the next chapter. But a lot of the major pieces are falling into place as we're doing these exercises. Okay, so hopefully you are doing them, and if you do, you really shouldn't, and you understand the material, and the concepts, and you're applying it, then you really shouldn't have too much of a problem doing the graded project. And I do suggest that you do the graded project before you move on to the, lesson 4, chapter 4, 5, 6. Okay. So this is for Nolan Consulting Inc. And it's September 2014, and it's the first month of operations. It says here, open up or set up T accounts in the ledger for the following accounts. So basically what it's telling you to do is set up a, one, you can create a chart of accounts. So I'm going to create one so that you have an idea what it looks like. So I'm going to abbreviate Nolan Consulting Inc. And it would say chart of accounts. Okay, so you would have the account number, and it would show the account. Okay, now it's telling us to set up the account. So I'm going to, we have a cash account, and then we have, and I'm abbreviating accounts receivable, supplies, equipment, furniture, accounts payable, common stock, service revenue, rent expense, and utilities expense. Okay, so you would include the account number. Now the data here is not giving you an account number, so I would create the numbering scheme for the accounts. Since I have only a few accounts and it's a small business, I'm only going to use a three-digit numbering scheme. All of our assets have to begin with a 1. So for cash, I would start out with 100. Okay, then accounts receivable. Now I'm going to stagger these accounts, because if in the future I have to add accounts and I need to stick them into different places, I can insert a number. So for accounts receivable, I would make that like 110, supplies 120, equipment 130, and furniture 140. Now let's say I had maybe a market account. Well, I'd end up sticking that account right in here, and I can number it 105. Okay, um, and that's what I mean by if I get a new account, I can be able to put it into the numbering scheme in its proper place instead of slapping it down on the end after like number 140 where it really doesn't belong. Okay, because after furniture, maybe I buy a building. Well, I would have land in a building. Well, the building would be like 150, land would be 160. But what happens if I decide to buy computer equipment? Well, I don't, the building, the land is a long-term asset. The supplies, equipment, and furniture are a lot shorter-term asset. And if I buy computer equipment, that's going to belong up here someplace in between 120 and 140. Okay, so I would probably, stick computer equipment in here, and I would number that like account 125, and that's what I mean by staggering your general ledger account numbers, so that if you had to add another account, you'd be able to stick it in, and it would fall into place in the chart of accounts where it naturally belongs, instead of over the course of time having a jumbled mess of accounts. All right, accounts payable, since that's liability, it's going to start with a 2. But I'm not going to number it 200. Okay, I'm going to start with like 210. The cash I numbered 100 because cash is always the first account you're going to have. And if you had like a petty cash, well, I could stick that in here as 105 and put petty cash in here. Or if I had, well, let me just theoretically call that petty cash. And let's say I get a bank account, right? Well, then I can number that bank account 103 and call it, a checking account, right? But cash is cash, all right? It's even more liquid than checking, okay? So that's why we would number that as 100. But when it comes to liabilities, equity, revenues, and expenses, even you don't really want to start with the 200, because you might have an account that you need to squeeze in, and you need to put in number 205, okay? If you started with accounts payable, at 200, then, if you're not able to stick that account before accounts payable, because there is no other number. 200 is the lowest you can go. So start with a number that's off of the round number of 200. Common stock, same thing. That's an equity account, so it's going to start with a 3, so I'd number that 310. Now notice when in the list that we had, okay, it didn't give you a retained earnings. Okay, well, I'm going to actually stick retained earnings in here, right? Because this is a corporation, we're going to use a retained earnings account, and it's not on my chart of accounts. Okay, it's not an account that's set up, so I might as well set it up right now, and I'm going to number that 320. And that this is a deviation from the solution in the book. Okay, this is just my experience coming into play. I'm going to stick in the retained earnings there. Okay, service revenues begin with a 4, so I'm going to number service revenue 410. Expenses, rent expense begins with a 5, so I'm going to make rent expense I would probably make rent expense 520 and utility expense 530. And the reason why is because I'm going to have a lot more expenses that I'm going to add in. And like, for example, if I'm going to want to put in payroll, I'm going to want to put it before account 520. If I made rent expense 500, I can't stick the payroll before, rent expense, because it's already at 500. I can't go any lower than the 500. So I want to have a little bit more wiggle room in there, and so I would number rent expense like 520. Okay, so that's what my chart of accounts is going to look like. Now, the problem itself is saying set up the accounts. And if I had a ledger sheet, my ledger sheet, and I'm going to end up erasing this, but I'm just going to quickly draw it in, right? This would be an account, and I would label the account, whatever account it is, cash, and whatever the number is, in this case 100, and even maybe have a page number on here, whatever that page number is, 1. I would have a date column, and then I have a description column here, and then I'd have a debit column, a credit column, and most likely a balance here, which underneath the balance I would also have a debit and a credit. Okay, so notice that I have like 4 different columns here, like 1, 2, 3, 4, okay, in order to put my information. Okay, so that's what my ledger would look like. Now, you can get different ledger forms that have different line schemes on them. Remember, it's not about the lines, it's about, getting the information. I mean, you might use a 2-column journal where you would not have the balance column here, okay? All you would have is just the debit or credit. Those are required, okay? But you're not required to have a balance column. It helps to have a balance column because, you put in the date, and let's say this is a debit to cash for 200. Well, now my running balance is 200. So then on 1-3, if I have another, say, debit for 300, now my running balance is 500. Okay, and then on 1-5, if I pay out, say, 150, okay, now my running balance is going to be 350 as a debit. Why? Because a credit of 150 from a debit of 500 gives me a debit of 350. Okay, so this way, every time I post my journal entry into this cash account, I update my running balance so I always know what my balance in that account is. Right, so this is like probably the best scheme that you can have. But if you're only using a 2-column journal, you don't have to have this balance column. If you had a 2-column journal, you can actually create, you can actually create yourself, 2 additional columns, right? In order to, and then call us the balance column, right? And even though you only have 2 columns, you make 4 columns out of it, all right? Remember, it's not about the lines, it's about the information that you're putting on the form, okay? So the instructions to this exercise said set up a T accounts or ledger account or whatever have you here. It says open or set up T accounts in the ledger for the following accounts. And they're calling T accounts ledger accounts. Well, if you had ledger sheets, and by the way, there are blank forms on the student community here. If you want, you can print those forms out and use those to help you work with the homework problems. Okay, you can use this ledger form and set them up. All right, but now I'm going to erase this. For the simple reason, I have space requirements. I'm limited in the amount of space that I have to, these PowerPoint slides. And, if I create one slide for each account, all of a sudden I've got, 20 slides that I'm bouncing back and forth between. So it'll make it difficult for you to follow along. And it'll also make it difficult for me to be able to do what I need to do, and it'll make the videos a lot longer than they actually need to be. So what I'm going to do here is yes, I'm going to use a T account, because remember, a T account is a tool. All right, I can use it in many different fashions, and in this case here, I can actually use it. So I'm going to put on this slide, I'm going to set up all of these accounts. Okay, actually I made it make that smaller. So cash, accounts receivable. I had supplies, and I'm abbreviating that. I have equipment. I have furniture. Okay, so those are my my assets. Then I have a liability account, accounts payable, and then I have equity accounts, common stock. And also remember, I said I'm going to create a retained earnings. So there's my retained earnings. Whether I use it or not, I don't know, but I should have it. Okay. Then I'm going to have service revenue. And I'm going to put my expenses over here. So rent, expense, and utilities expense. Okay, so there's my T accounts. Now, I'm going to write in the numbers, but I'm going to be, kind of limited on real estate space here, so I'm not going to actually be putting in dates and things like that, okay? You can look at the solution and see what the T accounts should actually look like with the dates and the word balance written in and the proper way that they should look at. But I'm doing this for homework. I'm also trying to just think through the process so it's not imperative that I do it exactly right. Okay, so I'm taking liberties, but you're getting the gist of what should be done. All right, so I'm at 15 minutes, and from the exercise instructions here, these were the transactions that were in the month of September, and then it says number one, open up the T accounts or for the general ledger, set up the general ledger accounts using those accounts. So we just did that, right? So then in the next video, I'm going to begin on number two, which is record the transactions in the journal and post the journal entries to the T accounts. And depending upon where I stand time-wise, I may or may not create the trial balance. I know I'm going to have to have a separate video for creating the income statement and the financial statement. So that's where we're at right now. So this was part one of this problem, and in the next video you'll see me we'll continue working on with part number two.